Thank you all for attending this session. Thank you, Kafir, for the kind intro, and to API Events for organizing this inaugural edition of Real Estate Experience Africa event. We are going to focus for the next hour on the co-working market in Africa with some of the leading providers of flexible workplace on the continent. A few thoughts and context before we open the floor to our panelists. It is now clear that the COVID-19 pandemic has accelerated workplace change and confirmed that the work is no longer just a place with a desk and a chair, but more importantly, a place for workers to exchange and collaborate. Hundreds of millions of people across Europe, the Middle East, and Africa have been forced to adapt their working habits, and companies are navigating to see how these trends can be part of their new workplace strategy. The flexible workplace sector, with a well-known high-density model, has not been immune to the effect of the pandemic, but there have been good signs recently across EMEA. With occupiers evaluating and adjusting their real estate needs, the flexible workplace seems to be at the forefront of the analysis. A few numbers. Right now, most offices are still following a traditional model. Globally, around 3% of the total office stock is dedicated to flex space. The highest concentration, of course, is in central London with 6.9%. If we compare this number of 6.9% with Africa, where the flexible market represents a bit less than, or a bit more than 0.5%, I think there is still some place to go. Expectations are for flexible office space are expanding rapidly over the next decade. JLL predicts that the 30% of office space to be flexible in some form by 2030. According to a Knight Frank Africa industry survey discussed at the latest API summit in October last year, about 48% of occupiers will adopt a flexible workplace arrangement. So is co-working going to be the new normal also in Africa? That's the real question. With this in mind, I suggest we start our discussions with 4 leading providers of co-working spaces in Africa. We have Andrzej Folkrewski, Global Corporate Development Director with IWG, the owner of global brands such as Regis or Spaces. Grégoire Schwebig, founder of Africa Works, a high-growth Pan-African operators, which has a couple of months ago announced its partnership with SeedStars to develop the community of African entrepreneurs. Paul Kirsten, co-founder and CEO of Workshop 17, an operator with strong footprint in South Africa. And Anna Clifford, director with Narobi Garage, active in, I believe, 4 locations in Kenya. So we have with this panel 4 different approaches and development strategies to the flexible workplace sector. We have one global provider, Pan-African provider, and then more local in mature markets such as South Africa, but also in emerging markets, but also already very competitive markets such as Kenya. So what I'm going to do, if you agree, is that first each of the panelists is going to give his 2-minute pitch introducing its company and its development strategy in Africa. And maybe a bit more tricky, what I would like to understand is how do they differentiate themselves with the other panelist brands? Maybe Andre, if we can start with you.
Definitely. So yeah, IWG, I think it's kind of the flag bearer, I'd like to think, with the sector. It's kind of been around for 30 years. It's the world's largest flex space provider, with around 180 locations across the continent, across 25 countries, and then a wider network of around 3,500 across 120 countries globally. So definitely very much around scale. And to that point around what do we do to differentiate ourselves? For us, it's about scale and being able to operate the most efficient platform, the most efficient state-of-the-art systems, which allow us to drive down overheads, which allow us to have a great sales platform and a marketing platform. And of course, that's critical in our business where it's all about occupancy. It's all about getting business centers filled and getting that real estate monetized. And then finally, it all goes back to the recognized brand as well, and making sure that, you know, everyone's heard of Regus, everyone's heard of that global player, and they can trust what our brands stand for. And then the final part is, of course, flexibility, which is why we've introduced a handful of other brands. Regus, which is that traditional brand, Spaces, targeted more at the creatives and the kind of the millennial generation, Signature, which is more about the premium offering for the exec levels, and then HQ, our cost leader. And really, I think when we look at differentiating, it's also about the services that we offer. So it's not just about desks and chairs. It's also about all the other services we offer, like meeting rooms, virtual office, and we're very good at monetizing that and making sure that our clients get the best service through that. In terms of growth, you know, we're very much aggressive on the opportunity across the continent, and not only about getting to new cities, but also infilling the network across existing cities and building on from our subscale presence in a lot of the countries, but also making sure that what we've got is that experience and platform, but what we don't have is the local understanding of the market. And that's where we really want to work with local partners to be able to accelerate that growth in the next 3 to 5 years.
Perfect. Thank you very much, Andre. Grégoire, if you would like to take the lead now.
Sure, absolutely. Well, thank you very much for having me. So we are, unlike IWG, the newest player in town. We've been in operation for 18 months. But having said that, we've grown exponentially. So we have now 10 Africa Works in 8 different cities across the continent. And we've opened that in the last 18 months, despite the pandemic. So it ranges from Dakar to Nairobi and from Cairo to Cape Town. So we're a truly Pan-African operator. Our development plan is to grow that platform towards 100 Africa Works by 2025, targeting mostly 20 major capital cities across the continent. So that's in terms of our history and our growth platform. I think in terms of our target audience, I mean, we have different types of products under the Africa Works brand. Some caters more for multinationals, where we host quite a number of HQs as well, of big multinationals. A lot of our clients are actually local SMEs, oftentimes in the service sector, and more we cater for the emerging startup scene in very specific cities like Lagos, Nairobi, or even Cape Town, where there's a strong startup community. And in terms of what differentiates ourselves, listen, we have all around this virtual roundtable, they're great operators. So I think for us, you know, it's starting with the basics. It's well-designed, well-operated spaces, which are actually price competitive, because Africa is a region where things are particularly price sensitive. It's about providing, a wonderful customer experience and client experience, really, that is drawn from, the hospitality as well. And it's about bringing add-on services to our members. Our mission is to unlock Africa's potential through work. And really our positioning is, and what we're providing our clients is a one roof stop shop for all our members, not only in terms of spaces, but in terms of services. So in every on our location, typically we have business concierge, either physically or virtually. We have a strong business community where we connect either physically through events or through an app, members of the community, within the same city. So a startup with a multinational in Abidjan, a local SMEs with a startup in Abidjan, but also across the various cities we're in. So, members of our community in Abidjan to Accra, to Dakar, to Lagos, etc., etc. So really it's about using the physical space to build the leading African business community.
Perfect. Thank you very much, Greg. Paul, your call.
Hello, everyone. Thank you for having me on the panel. I'm looking forward to the discussion. I'm the co-founder of Workshop 17, which is a South African co-working flexible office player. We started in 2012, and we now operate 6 locations at the moment, mainly in Western Cape in South Africa and in Johannesburg area. We're looking to grow that, to double that quite soon. I think our approach here is to really, it comes from a few things. It's really being local and understanding the local market and building a local community that is diverse. So we work for the startup or the first-time entrepreneur until the serial entrepreneur is in his 5th business and actually doesn't need to work for the money anymore. But we want to create a level playing field for them so that they can mix without status, without the one being more than the other. We treat the first time and the very senior one very the same. So we create spaces where everyone feels at home. For us, that is really important. You want to feel at home and welcomed when you're unsecure and starting your journey, and you want to feel at home when you've been in the corner office leading a big company and coming into Workshop 17, which I think is part of what we feel we are. We are as much in the space industry, but mostly in the hospitality industry. It is about having the hospitality and the service and understanding what our members and our clients need and want, understanding their business and how can we create a platform for them to succeed. So I'm very proud of the brand Workshop 17, but it's not about Workshop 17. It is really about the success of our members. And in that sense, we're very proud that we've been awarded the Global Award for Best Co-working Space with this Global Startup Awards of 105 countries participating. And I think it's something that is part of a jury and it's part of a public voting, but it's basically of the role that you play in the ecosystem. So for us, it's really about what role can we play, and I think that links to what Rick was saying also. What role can we play to unlock potential and to make people become the best they can be? And how can we make it their home for work? And flexibility always has something transient, but for us, it's actually, it's the movement from working from the corporate office. I mean, we're all at home last year, and now we're moving, I think, to work near home. And going out of the home for work is not, as you said, Ivan, in the beginning, it's not to sit in a cubicle or in a room. It's actually to be part of some energy, something more, a space that's inviting, that you feel comfortable in, but also people that you meet that add to the value of the day. And for us, that is key, and that's what we focus on.
Thank you, Paul. Great presentation. Last but not least, Anna, if you can introduce your company and your centers, your spaces. You on mute. Sorry, Anna.
Thank you. Thanks, Ivan. Yeah, so we started Narobi Garage back in 2013, 2014, actually as the offshoot of an investment fund that we'd set up, both in Nairobi, Cape Town and Lagos. And after a couple of years of running the fund, we kind of realized that the space element of it that we had initially just set up as a kind of really for our selfish own benefits of providing a pipeline for our fund, we realized there was a kind of a gap in the market for affordable space and where people of kind of similar interests are coming together to build their startups. So that was kind of the birth of Narobi Garage. And I think that kind of set the course for really the brand and kind of what we're about, which is very much stemming from that kind of innovation startup background. And so I think similar to Paul, Workshop 17 is for us, it's as much as it is now, of course, it is a real estate business in terms of the nuts and bolts of the business side of things in terms of our strategy and our growth and kind of really the mission is very much about supporting businesses to grow and supporting businesses that want to do things differently and want to use technology, which, you know, doesn't necessarily need to be exclusive. And I think as we've kind of grown, we've adapted what we're doing to really bring in more people that previously thought that tech and innovation was sort of an exclusive club, to say that even if you're a lawyer, you can be doing things differently. You know, innovation isn't necessarily about an app. It's also a mindset shift from the way that we used to do business to new ways of collaborating and being open and working with people. And I think that's sort of how we've designed the spaces. Is very much about how can we make sure that everybody who's coming to the space is meeting each other, is getting on, as you say, Paul, on an equal footing, and kind of interacting, really building an ecosystem which actually doesn't require only startups. It actually requires startup support organizations, investment funds, SMEs, corporates as well. That's all part of a kind of healthy ecosystem. And I think that's really been our focus. As we grow, we're also focused on bringing as much value as possible to what our members need in their business journey.
Excellent, thank you. Let's dive now into the actual co-working space in markets in Africa. Maybe let's start with Grégoire. What we've seen following through the pandemic is that with people working from home, there's been some interesting attention towards co-working spaces, because it gets easier for people to be working closer to home than to go to a head office in London or Paris. What I would like to understand, Greg, is that is the situation similar in Africa? We know that there are some infrastructure issues. So do we see the same trend than we see elsewhere in more mature markets, including in South Africa, by the way?
I think it's a great question. Thank you, Yvan. So we are in 8 different cities across Africa. Obviously, Africa is much more diverse than this, but I think we have a good feel from east to west and north to south about the various differences. I would say that what we've seen is the sub-Saharan African market have, from let's say Dakar to Nairobi, in our particular case, have been much less impacted, either from a health standpoint or an economic standpoint, by the pandemic. Just to give you an example, in cities like Abidjan, even during the first lockdown last year, we never closed our Africa Works, and members were continuing to be coming almost every day to the office. Of course, we had adapted in terms of the health protocols to host them, but I think unlike what we've seen elsewhere in the world, there's been an element of continuity for the simple fact that the health impact of the pandemic was much less in African markets. And I would also draw the attention to the psychological impact of the pandemic, which in what we've seen the markets will operate is much less than the impact they could have had in the rest of the world. So basically, in our particular case, of course, there's been some slowdown, but what we've seen is that people have, since really September, all come back to the office and are coming back to consuming offices, whether it's traditional office or flex office, and there's actually an increased demand for flexibility, mostly because people do realize that there's a high level of uncertainty, and so what they're looking for is the flexibility, the flexibility for their business. I would put South Africa aside, and I'm sure our friends from Workshop 17 will have much more enlightened views on that. Our experience, based on our Cape Town footprint, is that the South African market was much more impacted, both from a health standpoint and an economic standpoint, and somehow quite similar to what we can see elsewhere in the world, in the US or Europe. Now, the last point I want to be making on that is, again, in the sub-Saharan markets where we operate, there's this whole thing around work from home. I think a few of our clients, L'Oreal, not to name them, have tried this whole work from home during the first wave of the pandemic. And what we've heard from all of our clients is that it didn't work. And for various reasons, one being the simplistic, the lack of infrastructure, or the difficulty of the infrastructure, or, simply the cost of the data, and so what we're seeing is, yes, for sure, the work from home is going to be a global trend, and Africa will never be immune to that. but clearly because of the infrastructure, because of the cultural context, we believe that office will still be very much consumed. It's more about our conviction at Africa Works is that the office consumption will somehow leapfrog, like we've seen on the mobile banking or just the mobile phone, and then companies will go directly to the flex office, as opposed to what we've seen in Europe, first consuming the office the traditional way, and then later on consuming it the flex way.
Excellent. I'd like to build on what you say about the evolution of co-working spaces in Africa with Paul and Anna. It's great to have you both on the panel, because obviously, Paul, you're working in a much more, one of the most mature markets in Africa, certainly in sub-Saharan Africa, and Anna, you're in some what we called emerging markets. So, Paul, if we start with you, what did the pandemic change in your organization, and how do you see it evolving in the future? Because you were talking about growth, so I'm assuming that you see it. It's a positive. We're seeing a positive trend. But what's happening in South Africa?
Yeah, thanks. Obviously, last year was when you had to close our doors for a month. That was not very positive. But one element in the industry, it actually changed the relationship between operators and owners of buildings. And I think that's at least what we've done. We've restructured our arrangements and become much more partners. And I think that's a big way forward, that we're not a tenant. We're actually fulfilling a need that most landlords are not able to do because of all the operational stuff that we around the panel all know. It's very different to manage a 5-year lease than a flexible use. So that's the one thing. The second thing is that from a niche player or a niche solution, we become a mainstream solution. Flexibility was long seen as something for the startups, or something when you have a small team building in a new country, and until you have your own office. Now the office, I think for many companies has become a liability instead of an asset. And something that companies are wondering, do I want to bother with that? Do I want to have a fixed office with all the space and an IT team and a facilities team and a security, or do I want office as a service, which gives me a flexibility? So we're seeing a change in our clients from the smaller companies all the way to the big corporates. And a different need to make a continuum from the traditional co-working to your dedicated space in a co-working office, to actually co-working as an anchor tenant in a multi-tenant building or a precinct for the larger corporates to say, well, we have 800 people. We used to have 4,000 square meters. We're actually going down to 1,000 square meters because we need to do work from home, work near home, and work at a central place. And that's the third trend that I see is people are, and when we started, Mark Sefter, my co-founder, and I, we said, actually, it's a crime that people sit in traffic for, if you look in one of the big centers in Africa, you sit in traffic for 1 hour, 2 hours to go to a place where you don't want to be.
Sure.
And where you want to leave, it's taking 4 hours sometimes of the day for someone. So that commute should not happen in the future. And I think the pandemic accelerates that, because people don't want to go back to it. They want to go back to the office in a different rhythm, in a different timing, but they need a professional space and a space close to home where they can tap into in 15 minutes. So our growth strategy is actually also attuned to that. And I think that is a big change for our industry, but also for the corporates and for the landlords. To how do we create that hybrid structure as a seamless solution for the companies, big and small, that we service.
Okay. Anna, do you see the same trends in Nairobi?
Yeah, definitely. I mean, I would definitely say one of our biggest kind of focuses in the last few years to kind of make ourselves more mainstream was just constantly talking about the value of flexibility and why that's super important, and why it's actually not it's worth paying a premium for versus a traditional lease. even if we're relatively cost effective actually anyway, beyond the element of flexibility. But that was really hard for people to put like a value on, whereas I think now it's like a no-brainer. You barely even have to explain it to people and they're like, yeah, we get it, kind of thing. And also I think, as Paul said, a lot of people associated, especially in Nairobi, because most of the kind of shared spaces that existed when we set up were companies like iHub, which were very, very focused on startups. So it was always the assumption that if you're in a kind of a co-working space, and you must not really be able to afford being in your own office, and you must not be that serious about business, kind of thing. And so again, trying to make co-working become like the mainstream, not just seen as something for, struggling startups that can't afford their, own furniture. So I think this pandemic is now like, we don't have to talk about that anymore. Like that conversation is done. People understand that co-working is now like a product for big businesses and small businesses alike. So I think that's definitely been really helpful. And again, our relationships with our landlords have definitely become closer in the last year. I don't think I've spoken to them as much as I have in the last year. So that's also been like a nice change, rather than kind of this kind of quite adversarial, I guess, relationship in the past. Now has become a little bit more like, okay, we really need each other, so like let's work together. So that's been really great. And I think, for me, it's just been like a massive positive, as much as the initial months were really scary as hell for everybody. I think it's overall been like a positive, like A, that we've got through it, and B, that now our value proposition is like super easy to explain and understand. And as much as I think it's taking a longer time to go away than we hoped, I think that the movement is still in the right direction. And there's definitely things that we won't go back to wanting to have the same, like the traffic, wanting to be in the office at 9 a.m. for like no explicable reason other than like your boss just says so. I think those things we will lose. And again, I think we're in a position to take advantage of that as well, especially I think spaces that have multiple locations around one city. That's like a huge advantage that you can offer to people. Spaces that are open 24/7, whereas maybe traditional offices, the caretaker would like lock the door at 6 p.m. Now people want to work out of hours. Again, I think spaces that have that kind of flexibility and the security infrastructure to be able to provide that, I think they're really primed to be able to benefit a lot from this pandemic.
Excellent. Still talking about markets, Andre. When talking to Grégoire, Anna, and Paul, obviously they are focusing on major cities in Africa. We're talking from Casablanca to Joburg, Nairobi, Abidjan. IWG recently announced new openings of centers in, I would say, less traditional cities like Lomé, Conakry. We're talking about Libreville. How are you assessing the depth of the market, and especially in those, I would say, more frontier cities?
Sure, and I think the reality is there's business everywhere and there's a real estate market everywhere. I think that's the one benefit we have as a sector, a huge benefit, is that the opportunity is limitless in the grand scheme of things. You mentioned in your opening statement that I think it was 0.5% of African real estate was flexible of some sort, right?
Yep.
You take that to 2% or 3%, that is a phenomenal runway for growth. Even as a market leader with a very large portfolio already of 180 centers, we think that's still way off the mark of what the opportunity is. We're thinking about doubling our network over the next 3 to 5 years. And part of that comes into going into the new cities. So you mentioned Lomé, Conakry. We're opening up in Tripoli as well later this year. And then we've also got our first center in Addis, which is obviously a large powerhouse in that part of Africa. So what I think we're realizing is that it's not just necessarily about the larger kind of business hubs like Lagos, Johannesburg and Nairobi, but it's also about infilling. And for us, I think making sure we have a presence in all major cities, if we can call those kind of capital cities, but then also expanding into the regional and provincial markets. And I think it was something that Paul mentioned, which was the lack of desire to commute. And that's something we're very much focused on, is that hub and spoke model, where you can still keep your downtown CBD location, and you can have a workforce there where they might use more collaborative space, more meeting rooms. They might go in there 2 days a week, but people have realized they don't want to work from home. They've got, so many distractions at home that doesn't, necessarily lead to productivity. So they want to be able to work from their suburban location. And that's why we're also trying to build out the networks, not just in CBDs, but also beyond that. So for us, it's about a national network as well as a global network. And as a result, what we're seeing is across the African continent, that being able to provide that flexibility of location means that, when travel starts again, not only can a client in Lagos benefit from their permanent office, if we can call it that, but they can also use other offices and drop-ins as and when they travel around to see their clients, or indeed for personal reasons, as there's that kind of blurred line between personal life and work life.
Excellent. Grégoire, can you maybe build a little bit on that? Because obviously Andre was talking about smaller cities. You, for the moment, at least, you're focusing on what we could call larger cities in Africa. Andre was talking about suburbans. I think, to my recollection, most of your centers are actually in CBDs, or I would say more business-oriented area. I mean, can you maybe answer to Andre and having some thought about what Andre has been saying?
Sure. Absolutely. I think it's, I share a lot about what has been said. I mean, our strategy, in the last 18 months was to kind of plant the flags in, the kind of biggest business cities in Africa. Now we're entering the second phase of our development, whereby there's going to be two things happening. One, we're going to go vertically and open multiple location per city. So we already have 3 in Abidjan. By the end of this year, we'll have 5. Similarly, we're planning on having 3 in Nairobi by the end of the year, 2 in Dakar, etc., etc. So that's the first angle, is to your point, and I fully concur with this whole idea of hub and spoke. So it's about how do we make sure we provide a great experience for our members that is 10-15 minutes drive, and we really think not so much in terms of city, but around business nodes. And the fact is, what we've seen mostly in big African cities is that the flexibility of workers and their ability to move from one district to another district is somehow limited because of infrastructure, because of traffic. So it's really about having, how do you provide a good experience within the catchment area where the person lives. So that is one angle of our future plan. I think quite similar to some of the panelists today. And then secondly, we will also starting to be looking at more frontier cities, as you call them, earlier on, as we're discussing with cities like Lusaka and some Kampala, which are more frontier market, and start opening there to kind of complement the network, and also build that business community and be able to connect. Ultimately, I think quite similarly to what Hannah was saying, we want to help our members grow their business. We want to be their partners, and therefore we want to be able to connect them. So, a business traveler or a business owner from Bamako, when he will go to Dakar and Abidjan, will have access to not only some of the spaces, but also the community there.
Okay, just Grégoire, to follow up on what you were saying. I mean, when you look at IWG model, Andre mentioned, and it is, I think, one of the most important thing when you're trying to expand in an African market, is to make sure that you rely on local partners. I think your approach for the moment is a bit different, in a sense that, because maybe you're just in a launch phase, you have basically people on on the ground in each of the cities. Africa Works people, is that correct?
Yeah, absolutely. So our model is somehow different based on a couple of things. One, unlike IWG, we are not global and we don't aspire to be global. So our playing field is Africa versus the rest of the world, which obviously mechanically makes us closer to our markets. That's point number one. Point number two is, at Africa Works, one of our deepest conviction is that to be able to provide a great experience and a great value for money as well, you need to be extremely knowledgeable about your market. So we have this model where we're boots on the ground, literally in all of the cities we operate, and everything that we do, all the spaces that we open are company owned and company managed, and we're vertically integrated in that sense, because we've realized within an African context that this is the only way to control our development, but also B, to make sure that ultimately we can provide an experience that is consistent and of great standards in all the locations. So, because we're in Africa, we're boots on the ground, we focus on the markets we know, and we're vertically integrated. So in that sense, our model is really, I would say, custom made for African realities.
I understand. Excellent. Let's talk now. Sorry, Andre.
I think one item which was really interesting was the part around the scalability and the kind of focus on Africa and the boots on the ground. And I think that the boots on the ground part is really important. I think, I can't remember who it was who mentioned hospitality. And for us, I think the boots on the ground part is great, but you've got to free up those people. You've got to free them up from doing all the admin, doing all the accounts payable, receivables, all the kind of day-to-day operational works. And I think that's where the IWG kind of model is kind of trying to differentiate itself by saying, we want people in our centers to be interacting with the clients day to day. We want them talking to them. We want them finding out about their business. We want them being able to really help them rather than having to do the nitty gritty, which is the kind of the back end. And that's why we've been able to establish both local and global service centers, which can handle that for our global business. And then also on regional basis as well, which means that all that kind of stuff that gets kind of lumped into overhead, we can scale it and then therefore drive down that cost, which effectively goes onto the customer eventually, right? Being able to offer a cheaper price. But then more importantly, I think it's that hospitality element, which is, I think there's a growing kind of comparison between the hotel world. Instead of a bed, you've got a desk, right? And I think we're all aspiring to kind of have that sort of level of care and level of customer service when you walk into a hotel reception, as you do to any of our own panelists or centers. I think it's the same kind of level of aspiration that we all have.
Thank you for this clarification, Andre. I think you made a great transition to the next topic of this session, and looking at Paul. Paul mentioned that there's been some changes in the approach towards your landlords, from lease to management agreement, technically, which is a model which has been used for decades, including in Africa, with in the hospitality sector. Maybe it is something which, maybe because the market is a bit more mature in South Africa than elsewhere, but do you think, Paul, that and then after, of course, I'm going to go to Anna to see if you have the same approach towards landlords. But do you think there's something you can replicate, or lease is still the most traditional way to have I would say, a relationship between operators and landlords? Paul.
Yeah, thanks. It is indeed linking on the hospitality parallel. And hotels have been operating for decades and decades on this model, and there's a reason for that. And in that sense, we provide the study and the hotel provides the bedroom. We're actually now in the location here, our newest location in Rosebank, where we do all the business side of the hotel. So there's a hotel and a Workshop 17 in the same building. And we partner, and so there's a value add for both to it. It is definitely going that way. It mitigates risk that we've all seen with the WeWork in public. And if you want to grow as a business, fit out is not very easy to do. Getting funding for fit out of spaces.
Yeah.
So it needs to come usually from a partnership with landlords. I'm sure Andre can talk to that also from their experience. But further than that, it's really a partnership. And I think the landlords that understand it are the first ones to go this. They think in all countries, there's landlords think, oh, this is the crisis and it will go away and then everyone will come back to the office as before.
Mm.
And there's landlords think, no, there's a shift in the way people work and what the role of the office is. So flexibility becomes part of the offering. So it's not looking only at the Workshop 17 or any kind of brand, the co-working space and the flexible space, but that's seen as part of a blended solution. And in that sense, what co-working becomes is the same as what in South Africa term the supermarket like Woolworths or Pick n Pay or Checkers become for a shopping mall. You become an anchor tenant that activates the precinct and puts life in a precinct. And that is, I think, really, really important to understand. The trouble or the difficulty with that is that the financing still works on leases. So landlords and developers finance their buildings with a bank, with a lease. So we're also looking at where's the balance between risk and reward, and how can we help our landlords to still fund their property based on the lease, because the banks have not yet gone on to the new way of working. So that is, I think, a little bit of a mountain to climb, and there's models to do that, but we're working on those at the moment.
Okay. Anna, when obviously, I mean, as I mentioned earlier, the South African market is much more developed than elsewhere in sub-Saharan Africa. My experience, especially in West Africa, is that to have a landlord accepting a management contract is nearly impossible. I mean, how do you, because traditionally it's just pure lease, that's how it is. I mean, in East Africa is usually a bit more, I would say, advanced in terms of trends than West Africa. I mean, what do you see in Kenya and in the neighboring countries?
I think it is still pretty far away, I think, from that becoming something that landlords are open to. I think it will change over time. I think realities will become that in order for them to become more competitive, they will need to start being more flexible on their terms. I think getting into a management agreement and funding fit out, I think those could be easier conversations to have separately. I think a lot of landlords are not necessarily that flush by the end of the building. A lot of them get into deals where they're kind of funding their building through kind of exchanges of land for materials, and so they're not necessarily, many of them, having a lot of money that they can throw at like your fit out. So I think that's the reality here. Like, people don't have enough cash for that. I think because of the pandemic, getting into some more flexible terms with like that are maybe related to occupancy, or that can have earlier break clauses, just more kind of year-to-year type leases that can alleviate some of that kind of risk factor, I think is probably what will happen sooner. I think the landlords funding fit out, I think we're like still a little bit far away from that becoming like the norm here. But definitely it's I think because of the length of this pandemic now that it's gone on for so long, it hasn't just been like a 3-month thing and then we've gone back to normal. I think there are more and more landlords that are now starting to come around to the idea that maybe they can't insist on a 5-year lease anymore, and maybe they can't insist on just like a straight rent for that 5 years with like no possibility for renegotiation. But yeah, I think to going to the extent of like the Regis model and the Regis type deals, I think we're still a little bit far away from that here.
Okay. Grégoire, to follow up on what Anna said, and Paul saying, well, the workplace centers can be some kind of anchor tenants, if we can call tenants, in a building. What we do see a lot is many landlords unable to fill their space for the moment, basically go themselves without an operator into the co-working space. So they're developing a building, they lease maybe 80% of the spaces, and then for the 20 remaining person, they decide that they are co-working operators. Do you have any particular thoughts about this new trend? I'm not sure whether you are also owners of building or pure operators. Maybe you can expand a little bit on that.
Sure. Well, it's a very relevant case because we've seen that a lot. Landlords thinking that they could actually, it's very, very simple. And I think, unfortunately, our industry kind of suffers, at least in sub-Saharan Africa, from this idea that it's actually you take on a few pieces of furniture, you put it, and then, hey, you're in business. What we've seen is a lot of them tried over the last 2 or 3 years, especially with the whole, WeWork bubble. And what we've seen as well is that a lot of them failed. And actually, funny enough, to really take a real case study, so we took over typically one of the spaces in Accra, I think in August last year, that was operating at 10% occupancy rate, that had been open for 2 years. And they were losing a ton of money, and they always lost a ton of money. And in the span of 3 months, by December, we had reached 85% occupancy rate. And we hadn't touched much around the design, the fit out. I mean, there's a few things we tweaked here and there, but it's really, so my point here is that it's actually more complicated to make, much more complicated than what people could think in terms of how do you hit your ratios, in terms of your design, in terms of your fit out, how do you operate, what are the right sales channels, the marketing channel, the pricing, yield pricing, et cetera, et cetera. It's actually much more complicated than the perception, and therefore it fuels sometimes the desire from landlord to go into that space. I personally, and I do travel half of my time in between all these African capitals, which I know relatively well. I've never seen a successful case, to be very honest. So that's the answer to your first question, and then the answer to your second question, as to we are purely our model. We're purely an operator. But we would like to control our development. So unlike IWG, we don't do any franchise or management agreement. For now, what we've seen a lot drawing on the parallel with hospitality is that a lot of big hotel chain had on paper signed a lot of deals, but actually nothing was really, they were not really in control of their development. And I think we drove from that experience, and we want to really be in control of our development. So we're purely an operator, and then separately, because of our shareholders and funders, we're setting up a REIT for next year that will stop developing and owning some real estate. But these will be 2 separate companies. Of course, Africa Works becoming then the anchor tenant of the REIT.
Okay, excellent. Andre, Grégoire was mentioning that one of the strategy that you guys are using throughout Africa, because you think that local players know the market best, is basically true in these markets. What is the usual type of franchisee that you are signing with to develop Regis or the other brands in the Sub-Saharan Africa markets?
Sure. So I think the first one I'd clarify, Greg, was the comment around the competitors and some of them not being particularly profitable. So I think in our cities where we work, I think broadly there is a kind of a success criteria, and it's all about occupancy. And I think Greg's definitely mentioned being able to get the occupancy up to a decent number, and also maintain price is critical. So I think that's definitely we focus on. In terms of franchising, that's again, where we come to this is with a platform and the know-how. we're offering a pretty new, I think we've kind of done managed agreements for a while now. And now we're kind of moving to the next big thing, which we think is going to be franchising. And in terms of the profile, I think there's going to be some landlords involved in that. Already there are some landlords, some of our partners. There's also a lot of high net worth individuals, conglomerates, private equity, who are also very interested in working with us across those countries. And what we're seeing is that not all landlords are just asset owners, if we can call them that. They want to be active businessmen, and they want to be able to drive their own business. And that might be running the center day to day, whilst leveraging our sales and marketing channel, leveraging the sales team and the inquiries that we deliver, leveraging the systems, whether that's the CRM, and ultimately getting a step up to be able to be effective from day one, rather than having to learn the ropes over time. So I think that's what we're looking for is franchisees who want to be able to get into our sector, are aware of the growth, and also want to kind of also get into the real estate game, so to speak. So we have a lot of partners who will also acquire buildings if they don't own the freehold already in properties. So that's another angle. It's not just around monetizing from a rental perspective, but we all know that the real estate market is growing phenomenally quickly, and there's an opportunity for asset appreciation as well over the long term. And we've mentioned the anchor tenant word, but I think the other thing is an evergreen tenant. Once you're at a high occupancy, it's rare that we'd want to close out our centers, and therefore there's this kind of long-term play whereby hopefully in 10, 20 years time in a partnership, you'd still be in that property. And hopefully also when you've got international companies coming into that property, you elevate that building for the remainder of the space, if there is some, not dedicated just to flex space.
Okay, excellent. Thank you, Andre, very much for this. Going now to we're getting to the end of the session, but I have a couple of topics that I would like to raise. The first one with Paul about investments. You were talking about possible growth in your for your venture. How do you get into the funding of this growth? Is it through pure cash flows coming out from the operations, or do you have private equity owners or institutionals? I mean, what is how does it look behind the scenes in this respect?
Good. As far as I can talk about it at the moment,
of course.
I think we, with a change of becoming looking towards management agreements, we are looking to, as an operator, to become asset light. So in fact, we operate the business on behalf of the manager. It's what the previous speakers also spoke about, is your partner with your landlord.
Yeah.
And your target is actually to create to reduce vacancy, not only for the co-working space, but for a whole building or the precinct that they own, and have a higher return per square meter than you would have a normal lease. And as Andre said, once you're operating and you have a lively community and it's full, it's very rare that you actually dip down. So it's very sustainable because you have multi-tenanted, you have lower risk, which puts the base for landlords to invest a little bit more. They used to invest in TIs and fit out. The second part of it is the way we fit out is also for the long term, and we do it flexibly. So one thing in property, and especially commercial property, is every time that a new tenant comes in, the whole fit out gets just thrown away almost,
yeah,
and redone. It's financially not clever. I think for the environment, we cannot sustain this. We must feel, and we must even develop buildings in a different way. So the way it's been developed now with the growth with the change of market, I think in South Africa, there's too much commercial property that you find difficult to repurpose. So I think our partnership is further, so the money will come. The short answer, the money comes from the landlord. The long answer is it becomes part of how you design and operate the whole building. So it doesn't become a surplus. So we're partnering more and more in the stage of development with our architects, with the architects of the landlord to actually make it an investment that is future proof. And there's where the benefit for a landlord sits. and it enables us to grow. We've been in a different role. We've been in a role with a big partner, with big pockets. And I think in that sense, the risk of being an operator company is if you don't own the asset, then you actually build up a whole debt while your asset depreciates. So the second option is to do as Gregoire's company is doing, is actually have their own property company who owns the building and work together with your own operator and actually grow together. I think those are the two avenues to pursue.
Okay, sounds good. Grégoire, sorry, tough question for you. As you know, as an investor in Africa, one of the main issues you have is Forex regulations. I know that some of your centers, for some of your centers, you're charging in dollars, some of them in local currency. How do you, being across 8 different cities and countries, how do you manage and this kind of regulation, especially towards your getting money back to your investors?
Sure, I think it's a great question and a real African risk, and this risk is not spread around Africa the same way. In that sense, the risk in Kenya or on the opposite side in Francophone Africa is very different from Nigeria, where I'm talking to you from right now. So the first question is, right now we're very much in a growth phase. So the truth is, we're investing. There's a certain structure that we've put in place. So the profits of our existing spaces we reinvest to kind of fuel the growth. That's point one. Second, there's a whole, of course, legal and tax structure and mechanism that needs to be put in place so that you can fuel the money. And then thirdly, I'm not going to be lying to you, it's tough. So we have literally a dedicated person that does that almost all year round. And it's about following the rules and regulation of each other countries we operate in, which is not easy, but it's a lot about make sure that we follow the rules, make sure that we have proper planning. And at the end of the day, it's very doable, bringing money ups and downs and giving it back to the shareholders. It just takes a lot of time and it's costly. And fortunately, this cost is, as Andrew mentioned earlier on, is passed on to the client as much as possible. We only take leases in local currencies, and whether, especially the case in Ghana and Nigeria, where there was a big push for a hard denominated currency lease, which we don't do. And generally speaking, most of our clients, I would say 70% of our revenue is in local currency and 30% in hard currency. So that's how we kind of hedge it at local level to kind of minimize the flux of money.
Excellent. Thank you for that. It's very useful. Last topic of the day, Anna. PropTech is the flavor of the day. You were talking about innovation. How do you implement PropTech, and what kind of innovation solutions do you implement in your centers, and how do you see it growing in the near future?
Yeah, I think for what we do personally is we actually use a lot of different platforms that are white labeled, and we integrate them ourselves together. So I think there is a sort of a push for companies to develop their own proprietary software, but honestly, that's like a bit of a nightmare. Technology is changing so much, and also what customers expect are changing so much that I think it can be like a really deep hole to go down to, like developing your own platforms. I know that like IWG have it, and I think that's great, but they're like huge, and I think they've done it for a long time now. That's great for them. But I think for the rest of us, I think it makes more sense to kind of leverage on technologies that other companies are building and kind of finding ways to integrate it for your customers' needs at that point in time. So we have probably about like 10 different tech platforms that we use for like different elements of our service. And yeah, that can get a little bit messy and a little bit like time consuming and costly. But what it means is just that you always have like the most up-to-date software and the most up-to-date services and trends on the tech that you use, because there's, you know, a whole other team sitting in another part of the world, like developing that day and night, as opposed to you kind of trying to do it yourself and ending up with something that is probably always like a little bit behind the curve. But yeah, I mean, I think what will be interesting is if, you know, it can come to the point where landlords can start using it for things like utilization of their space, and kind of making their services more efficient. So hopefully we can see service charge being brought down more if, you know, yeah, landlords start using technologies to manage their buildings. That would be, you know, that would be really interesting to see. I think it's probably going to be a little while in our part of the world before that becomes like but again, I mean, as Greg said, I think, you know, Africa is like leapfrogging, so maybe it will come like sooner than we think. But yeah, for us, I mean, because again, like as with hotels, we're very service focused, where members are expecting things more than a desk and working internet. And because our members are also very techie, I mean, we have some members that really like to like log in, be able to monitor the internet for some reason, kind of thing, and they want to be able to get visibility over like everything that's happening in the space. They want to know yeah, kind of what's happening, and are very interested in the technology that we use. So I think that also spurs us on to be more kind of spending more time on like, okay, what is like the latest thing that's out there that can help our members have a better experience, be it I mean, one thing that's come up recently now is a lot of companies are starting to do more webinars. And so that's something that we now provide as well, is like a webinar platform, so that they don't each have to get their own Zoom account. And so that becomes like a benefit that we can pass on as a provider for those kind of things, that where we can just extend that to members. Communication tools are great as well for networking, especially that's been really helpful when people were working from home, but they were still, you know, members of Narobi Garage, but not physically coming to the office. We found that a lot of people who perhaps weren't necessarily using the online communication tools before are now all like up in all the platforms, so that they can actually like connect with people that they were previously just bumping into in the office. So I think that's also been kind of nice. As people have come back to the office, they've been like, oh yeah, like it was really great to keep in touch with everybody, and we've been, you know, doing like Friday night wines and things like that, like during the lockdown, which has been great, thanks to technology.
Excellent. So at the end of the day, it's again service rather than a desk and a chair.
Definitely.
So it is the unfortunately the end of the session. Maybe I'm going to ask each of the panelists to give us a last word about what they're seeing in the market, how do they position themselves, and maybe some positive notes after these 15 months of COVID. Andre, can we start with you? You're on mute, Andre, sorry.
Thank you everyone for all the inputs. I think it's a really interesting session. But I think the reality is that, you know, we're much more cost conscious than we were before, and I think that's where we're trying to play that game. Is all about scale. The fact we can develop our own systems, the fact we've got access to all the data across, you know, the way that people are working. We have an annual report that we publish about how people are working and the changes, and we really monitor that, so we can, you know, improve our own systems, improve our own platform as well. And you know, I think the one area which we're really excited about is growth. You know, this really is a sector which has huge opportunity. And of course, you know, we're very much interested in talking to landlords or investors who are looking to partner with us, whether that's a manager agreement, whether that's a franchise relationship, whether they want to white label and own a brand of their own even. We're very much open to working with people who are looking to get into this space, and hopefully trying to be flexible with that.
Thank you, Andre. Grégoire?
Yeah, I think my closing remark would be one of excitement that I would like to share. I think, as Andrew just mentioned, I think it's the very beginning of that industry and that service in Africa. And I think this pandemic is actually, you know, in 3 to 5 years' time, when we'll look back at this moment, will be a great accelerator of that. So yeah, I mean, we're very excited about the growth prospect, and we're exciting for the coming years to come.
Thank you, Grégoire. Paul?
Yeah, I would support it, and it's really nice to be in a diverse group here. And I think we're only at the start of the journey, and the COVID will accelerate the journey after a year of slowdown. But also the diversity of what we are offering and how we are approaching it. I think there's choice for the people out there, and if we're now at 1% of the market, I think flexibility will be beyond 10% in the coming years. So there's lots of opportunity. There's also lots of lessons learned. And the excitement, I think, also grows to, we're the ones who then dive into developing our own software over 8 years now, with internal currency to make it completely friction-free. But I think one of the challenges forward is how can we use our expertise for the bigger corporates who now need to manage their own space like a co-working space. So I think apart from managing our own space, and Andre also spoke to it, can we help larger occupiers and landlords to manage this new normal that is coming on? So lots of opportunities, and thank you all.
Excellent, Paul. Last word, Anna?
Well done, Paul, on developing your own software. Yeah, I mean, I think echoing what others have said, I think it's an exciting time to be in this space. I think that the COVID has made everybody slow down and has created space for old habits to be changed. And I think it's really a great opportunity for us to see what else we can develop and provide that, 10 years ago, co-working was the new thing, actually. It's not anymore. It's just that people are waking up to it. So what is like the next thing that people are going to be perhaps even more open to now? Because thanks to COVID, I think people's minds have been opened a little bit more. And I think there's definitely gaps that have been created for all of us to be able to do the next way of working and the next iteration of this.
Excellent. Listen, thank you all on behalf of the attendees and on behalf of API Events for having participated to this session. I think we heard some very wise comments. Obviously, some positivity about the market in the future. So thank you once again, Andre, Greg, Paul, and Anna for your time today.
Thanks.
Thank you very much.